How to get into cryptocurrency in 2023 top tips. Disclaimer: the Industry Talk section features insights from crypto industry players and is not a part of the editorial content of cryptonews.com. Although digital assets have been around for over a decade, many investors still find the crypto market overwhelming. However, contrary to popular belief, getting started with a first-time crypto investment is fairly simple. This guide explains how investors can venture into the space of cryptocurrencies. We also share some handy tips on how to get into cryptocurrency safely while minimizing the overall risks. 10 top tips on how to get into cryptocurrency in 2023. Here are some useful tips to follow when trying to get into the crypto space as a beginner. Find low-cost, high-potential presale projects like Wall Street memes. Get educated about the crypto market. Develop a strategy. Learn how to store cryptocurrency safely. Choose a crypto exchange or broker. Diversify investments. Invest with a dollar cost averaging. Gain exposure to cryptocurrency indirectly. Earn passive income with crypto. stakingUse. Leverage carefully. For complete beginners, we have prepared an extensive guide on what is cryptocurrency, explaining how digital tokens work and how they are different from other assets such as stocks and commodities. A closer look at how to get started in cryptocurrency. When Googling how to get into crypto, investors are likely to be bombarded with thousands of search results. There are virtually hundreds of articles on the likes of next cryptocurrency to explode and how to get rich with crypto. However, many guides fail to explain how risky the crypto space actually is. In fact, cryptocurrencies are perhaps the most volatile asset class in the financial market. It is not uncommon for the price of cryptocurrencies to swing up or down by 10% or even more within a single day. For some investors, the high risks might be too much to handle. That being said, there are also ways to deal with risk when investing in cryptocurrencies. With this in mind, let us dive right into 10 tips that investors can use to get into the crypto market in a risk-averse manner. 1. Crypto presales. Get into the crypto market at a low entry price. As of writing, the most popular cryptocurrencies, Bitcoin and Ethereum, are trading at around $26,000 and $1,700, respectively. Hence, the first thing that might occur to new investors is that major cryptocurrencies are expensive. However, that isn't the full picture. Investors need not buy well-established, large-cap cryptocurrencies to make money. Instead, the best way is to identify the fastest-growing cryptocurrencies that are available at a low entry price. This is where crypto presales come in. In a nutshell, crypto presales happen before the digital token is listed for market trading. The main purpose of token presales is to raise capital for the expansion of an emerging crypto project. For investors, crypto presales come with many advantages. For instance, crypto presales allow investors to gain access to a disruptive new project from an early stage. Additionally, crypto presale tokens are often sold at a low price when compared to their future listing price on an exchange. This means that there is high upside potential, and furthermore, inexperienced investors are not required to risk vast sums of money to gain exposure. For example, take the case of Ethereum, one of the most successful cryptocurrencies of all time. Ethereum held its presale in 2014, where investors could one ETH token for just 31 cents. In 2021, one ETH was worth over $4,100. Even during the 2022 bear market, ETH was trading above $1,000. Therefore, those who bought Ethereum during presale and held onto their coins would have seen their portfolios grow by unprecedented amounts. Some of the best crypto presales of 2022 included Tamadoge, Battle Infinity, and Lucky Block. Tamadoge started its presale at a price of 1 cent per token. By the time it was listed on crypto exchanges, Tama tokens were trading at around 20 cents, registering a profit of 2,000% for early investors. Bearing all of this in mind, we have researched a number of upcoming crypto presales that have every chance of mirroring the success of Ethereum, Tamadoge, and other notable projects. Wall Street memes presale in its final stage, with over $25 million raised and 1 million social followers. Wall Street Memes WSM is an extremely popular meme token that has raised over $25 million in just over 3 months. This is an impressive amount of money to raise by presale standards, showcasing its appeal to investors. The memes are hilarious, and this is one of the largest and most well-respected meme ICOs in recent times, with lots of media attention. This particular project has also shown interaction with Elon Musk, who has previously tweeted about another well-known meme coin, Dogecoin. Meme coins that focus on remedying the disparity between retail investors and Wall Street actors have proven immensely popular, and this could be why Wall Street Memes is selling out so rapidly. It has a large following of over 1 million people. On Twitter, it has over 250 followers following its memes. This is an extremely ambitious movement, hoping to follow previous meme tokens such as Shiba Inu and Doge with a huge army of followers. It aims for a $1 billion market capitalization, which is no small amount. It also plans to launch from a Tier 1 centralized exchange, such as Binance or Coinbase. Such launches can propel trade, volume, and price appreciation. There is a maximum supply of 2 billion tokens, with 50% available in the presale, 30% for community rewards, 10% for CX liquidity, and 10% for DX liquidity. The campaign also launched an airdrop of $50,000 worth of WSM tokens. It is currently in its final presale stage with a price of 337 cents. This could be the last chance to get the token before it hits a major exchange where the price is likely to increase substantially. Payments can be made via ETH, UST, BNB, or credit card. Check out Twitter and Telegram for further information. If you're serious about joining the Wall Street memes army before the presale ends, make sure to read the white paper to understand all the dimensions of the project. This could be a great presale project to start with to get involved with crypto. Sonic New ERC1 Degen token with generous APY rewards and $850,000 raised in one-stage presale. Sonic is meme token and a one-stage presale with a consistent price of just 14 cents. This means that it does not matter if you get in early or late, as the price remains the same as long as you invest before it lists on an exchange. Unlike Wall Street memes, Sonic has a low hard cap of $2 million and is already nearly halfway there, with nearly $850 raised in its ongoing presale. This amount has been raised in about 2 weeks, so interest in this token is high. Sonic is based on the Sonic the Hedgehog franchise, but it is no affiliation. There's a total of 299,792,458,000 Sonic tokens, with 50% of this allocated to the presale, 40% to staking, rewards, and 10% towards DX liquidity. Sonic is not for the faint of heart and wants to reach a market cap above $2 million as soon as it can. Remember that this is an entertainment token that makes a lot of claims. It has limited utility. At the same time, utility-free tokens like Dogecoin created explosive returns for investors. It all depends on community involvement. Sonic further offers a new stake-to-speed model which generated a giant yield of 26,648% at one stage, though this figure is currently closer to 80% as more people stake their tokens. At present, over 32,476,284,087 Sonic tokens have been staked. Prior to investment, please ensure you read the white paper in depth. You might also consider linking to the Telegram and Twitter accounts. Sonic has undergone a smart contract audit with no severe issues found, which is reassuring for potential investors. To take part in the presale, a Web3 wallet such as MetaMask or Wallet Connect is required, along with ETH or US to finalize the transaction. This can get you started in crypto for a minimum cost. All in all, presales like Wall Street memes and Sonic can be a great way to get started in the crypto space without having to risk large amounts of money. 2. Get educated about the crypto market. Crypto presales are undeniably one of the less expensive ways to gain exposure to the blockchain space. However, before moving forward, investors should also ensure that there is a firm understanding of the ins and outs of this market. To get started, investors should familiarize themselves with the most popular cryptocurrency terms. When navigating the crypto space, investors will come across many new terms such as HODL, wallets, NFT, meme tokens, and exchanges, all of which might have a different meaning elsewhere. It is also crucial for investors to have a clear idea about cryptocurrency regulations in their country. Although cryptocurrencies are largely unregulated, some countries have policies that limit the trading of digital assets. Similarly, countries across the world also have distinct rules regarding crypto tax. Some nations require their residents to pay taxes on the profits generated from cryptocurrency investments. As such, investors should be clear about what their duties are and how they can protect themselves before risking money on a volatile asset class like crypto. 3. Develop a strategy. Once investors have a basic understanding of what digital assets are, it is time to consider how to get rich off crypto. After all, this is the overarching reason for learning to invest in cryptocurrencies. In this regard, investors can take on two different approaches. Long-term investing. In this strategy, investors will buy a cryptocurrency and hold the tokens for years at a time. This method is popularly known as HODL, or buy and hold. Crypto hodlers believe that the value of the cryptocurrency will appreciate over the long term due to their use cases or potential for growth. Short-term trading, on the other hand, crypto traders are much more active in this space. In this strategy, traders speculate on the future price of a cryptocurrency and open positions accordingly to make a profit. The main difference is that traders open and close positions in the short run. For instance, an investor might speculate that the price of Bitcoin will increase by the end of the day. So, they might open a trade to buy Bitcoin and close it in a few hours if and when the price of BTC coins increases. As is evident, the profit with short-term crypto trades can be marginal. However, crypto traders open and close multiple positions so that their profits add up over time. Moreover, crypto traders are not always after digital assets with growth potential. Instead, they are looking to profit from the short-term volatility of cryptocurrencies. There are many strategies in the realm of crypto trading. While some professionals keep their positions open for a few hours, others close them within a matter of minutes. In addition to this, traders can also use derivatives such as CFDs to go short to profit from the falling prices of digital assets. Traders generally rely on technical indicators and other crypto tools to arrive at their decisions. Needless to say, crypto trading is not entirely suited for complete beginners, as it requires some expertise. Over time, investors can decide on a strategy best suited for themselves based on their risk appetite and financial standing. Regardless, it is always necessary to be clear about the proposed strategy before buying crypto. This will help to find answers to important questions such as which digital assets to buy and how much to invest in cryptocurrency. 4. Learn how to store cryptocurrency safely. Before proceeding to buy digital assets, investors and traders should also think about how to store cryptocurrencies safely. For those unaware, cryptocurrencies are stored in digital wallets. Let's explore how crypto wallets work. A crypto wallet has two components, a public and a private key. The public key is used to create wallet addresses that can be viewed by everyone. A public key is made of numbers and letters and can be shared with others in order to receive cryptocurrencies in the wallet. Public keys are automatically created when setting up a crypto wallet. The private key, on the contrary, is not publicly viewable. Investors will need to have this private key in order to send cryptocurrencies from their wallets. In other words, the private key essentially serves as the password. On top of this, new crypto wallets also generate a seed phrase during the initial setup. This seed phrase is used to recover the crypto in the wallet in case the password is lost. Without the recovery phrase, users of the wallet won't be able to access their cryptocurrencies if they lose the password. This is why it is always necessary to keep the private key of the wallet safe. Moreover, the safety of the cryptocurrencies will also be determined by the type of digital wallet chosen. When thinking of how to get a crypto wallet, investors have two options. Software wallets. Software wallets come in the form of applications that can be downloaded to a device, such as a laptop, tablet, or phone. This type of wallet comes in both custodial and non-custodial varieties. For instance, custodial wallets are those that come integrated with exchanges and brokers. With custodial storage, the provider will have access to the cryptocurrencies stored in the wallet to carry out transactions on the user's behalf. However, entrusting a third-party crypto exchange for the purpose of storage might not be the wisest of ideas considering the recent collapse of FTX. Instead, non-custodial wallets are the safest option. Non-custodial wallets are those that hand over full control to the user. This means that the user is the only person that has access to the wallet and subsequently the crypto assets. Hard wallets. Hard wallets come in the form of small devices that can be connected to laptops and phones. Hard wallets might be the best option for investors who prefer to hold on to their assets for months or years at a time. That being said, hard wallets can be cumbersome when it comes to convenience. Not only will users need to keep their passwords safe, but they will also need to have access to the device every time they wish to carry out a crypto transaction. Put simply, the best crypto wallet will ultimately depend on the strategy of the investor. For instance, someone who carries out a lot of trades might prefer to use a software wallet. On the other hand, hard wallets might be best suited for those who take on a long-term buy and hold strategy. 5. Choose an exchange or broker. Now that we have covered the basics, let us move on to the process of how to get cryptocurrency. Perhaps the most common way of buying digital assets is to go via a crypto exchange. Investors should opt for online brokers that are regulated, which offers a more secure environment. For instance, eToro is one of the top crypto brokers available today. This broker is regulated by the SEC in the US, FCA in the UK, SEC in Cyprus, and ASIC in Australia. The platform was launched in 2007 and has since grown as one of the most credible brokers that facilitates crypto trading. Apart from being regulated, eToro also supports social trading and allows users to store their cryptocurrencies on the platform. Investors can buy crypto with credit/debit cards, e-wallets, or via a bank transfer. There are many other crypto exchanges that cater to both investors and traders, so research is crucial. When choosing an exchange or broker, investors should consider the following: the types of cryptocurrencies supported, regulatory status, and security, types of payment methods accepted, fees, customer service. To learn more, refer to our guide on how to choose a cryptocurrency exchange. After buying cryptocurrencies, investors can choose to leave their digital assets with the exchange or move them to a private digital wallet. Once again, the best option will depend on the strategy of the investor. However, if using an exchange that doesn't hold a Tier 1 regulatory license, the coin should be withdrawn as soon as the purchase is made. Once again, This is why we prefer eToro, as it is heavily regulated. Your capital is at risk. Crypto asset investments are highly volatile and speculative. 6. Diversify investments. As with any investment, cryptocurrencies also carry an inherent level of risk, meaning it's important to have the right allocation of crypto in your portfolio. Moreover, this asset class is particularly volatile, and a single event can lead to the broader crypto market losing a considerable amount of value in the span of a day. Therefore, when learning how to get into cryptocurrency, investors should also understand the best ways to mitigate the risk. Diversification is one of the core concepts of investing. In simple terms, this strategy involves spreading investments into different cryptocurrencies. Instead of buying a single cryptocurrency, investors will allocate certain percentages to multiple digital assets. By taking this approach, investors can limit the risk and reduce exposure to volatility. To make things even better, it would also be smart to diversify into asset classes other than just crypto. This ensures that investors avoid losing everything at once, even if one asset goes down in value. When diversifying, it might be best to pick a number of well-established digital assets, along with some of the best emerging cryptocurrencies such as -2 Trade. Investors should also explore utility tokens with different use cases, which can further reduce exposure to a single market. 7. Invest with dollar cost averaging. Dollar cost averaging is another popular strategy that can help take better control over crypto investments. For instance, let's say an investor is wondering how to get started with cryptocurrency but is not sure when to buy a digital asset or what amount to invest. In dollar cost averaging, the investor will allocate a fixed amount of money at regular intervals to the same asset. This way, investors don't have to worry about getting the timing right. Instead, it takes away the emotion from the decision-making process and reduces the risk while still offering an opportunity to profit from market swings. When choosing an investment strategy, it is essential for investors to do their own research to make the best possible judgment. Always remember that the value of cryptocurrencies can increase or decrease within a short time, so investors should be prepared to lose their stake. 8. Gain exposure to cryptocurrency indirectly. If investing in a cryptocurrency directly does not feel like the right choice, there are also other ways to gain exposure to the blockchain industry, such as invest in companies connected to blockchain. One way is to buy stocks in companies that operate in the crypto space. This allows investors to benefit from regulatory oversight and evade the risk associated with storing crypto. There are several companies that are publicly listed that fall under this category, such as Coinbase, PayPal, or Square. Invest in blockchain ETFs. Crypto ETFs are another emerging asset class that is gaining popularity among investors. It allows investors to gain exposure to multiple digital assets via one investment while providing the benefit of diversification. While some blockchain ETFs track crypto futures, others invest in companies. We have a guide on the best crypto ETFs that will explain how exchange-traded funds work. As with any investment, crypto stocks and ETFs also carry risk. Investors should always evaluate their goals and financial situation before staking money on any crypto-related asset. 9. Boost crypto investments with staking. Crypto staking is a concept that is particularly appealing to long-term investors. In simple terms, instead of having the digital assets sitting idle in digital wallets, investors can deposit them into a staking platform and earn interest in return. Here is an example of how crypto staking works. Suppose that an investor has $1 million worth of arguably the best staking coin, Ethereum. They can deposit Ethereum into a crypto staking platform that yields 10% APY over the course of a year. $1 million worth of Ethereum would yield $100 in rewards, which has been earned passively. There are many crypto staking platforms that support such interest-earning accounts. However, the yield offered and the terms of staking will vary from one platform to another. Moreover, not every cryptocurrency can be staked. Nevertheless, crypto staking and interest accounts are a simple way for investors to generate passive income on their digital assets. 10. Use leverage carefully. Leveraging refers to the process of borrowing money from a broker or exchange to fund an investment. So if a broker offers leverage of 110, investors need to put up only $10 but will be able to buy $100 worth of cryptocurrencies. Leveraging is usually used by traders in order to boost profits. While the concept might sound appealing, it also comes with additional risks. For instance, if the trade does not go as speculated, the losses will also be multiplied, which can be catastrophic. Due to the high risk involved, leveraging is not supported by all crypto exchanges and brokers. Moreover, it is also best for beginners to avoid leveraging their positions until they have a good grasp of the crypto markets. How to get into crypto mining. When researching how to get into cryptocurrency, investors are likely to come across the concept of mining. In simple terms, mining is the process through which cryptocurrency transactions are validated. In doing so, new cryptocurrencies are minted. There was a time when crypto mining was lucrative. Anyone who had access to a powerful computer and technical expertise could mine crypto. However, today, a search for how to get into crypto mining will reveal that a home PC is not sufficient anymore. Instead, crypto miners will have to invest in expensive hardware, pay high energy fees, and consider the cost of maintenance. In addition to this, miners should also be technically proficient. The alternative is to take on a passive approach via the best Bitcoin mining sites. These platforms handle the mining part on behalf of their investors and provide users with returns. However, the returns will be minimal, and investors might need to wait a long time to earn enough cryptocurrency to make it worthwhile. Given this, crypto mining might not be the most beneficial strategy. Rather, investors might want to consider crypto presales that come with higher upside potential. As we discussed above, presales are the easiest way to get access to the best future cryptocurrency projects at a discounted price. Conclusion: cryptocurrencies have emerged as a sizable force in finance. As our guide has discussed, there are many ways for investors to get into crypto and improve their chances of making profits. One of the best ways to enter the crypto market is by investing in cryptocurrencies that have low entry prices but high potential to grow. In this regard, investors might want to consider participating in crypto presales. Wall Street Memes and Sonic are two notable projects that are running their presales at the time of this writing. These projects are innovative and have the scope to grow tremendously in the future. They are great options for those looking to understand Web3 in detail, without risking large amounts of capital. Fact: how can a beginner start in cryptocurrency? When thinking about how to get into cryptocurrency, the first step is to learn about digital assets. It is important for beginners to know about how cryptocurrencies work and the different ways to profit from them. Once ready, investors can proceed to buy cryptocurrency via an online broker or exchange. What is the easiest way to get into crypto? For most investors, the easiest way to get into cryptocurrency is by buying digital assets via a broker or exchange. Then, investors can wait until the value of the cryptocurrency increases to sell their digital assets for a profit. Of course, there is no guarantee that the price of the selected cryptocurrencies will rise. How do I start investing in cryptocurrency? To get started with cryptocurrency, investors should first have a digital wallet. Next, they should set up an account with a crypto exchange or a broker. Once the registration process is complete, investors can buy cryptocurrency using fiat money. After completing the purchase, move the cryptocurrencies to a secure digital wallet for safekeeping. Can you get rich on cryptocurrency? While some investors have profited greatly from cryptocurrencies, consider that many have lost money. Beginners will need to find the best cryptocurrencies to buy and get the timing right. That being said, when considering how to get started in cryptocurrency, investors should also educate themselves about the high risk and volatility associated with this market.